was going on here. Let's go on to the second part, which
Sure.
is MMTLP. And as you said, like, it was meant to be straightforward where you were going to basically take preferred shares, turn it into a private company, and then suddenly you're getting traded for most likely the reason you're talking about here. Do you want to just walk through how you found out that was happening and what was going on?
Absolutely. So, we did the merger. Everything was fine. We issued the Series A preferred share. And in our proxy statement, it was crystal clear that this preferred share was not going to be traded, that the company was not going to take the steps for this Series A preferred to trade. It was merely a placeholder that was issued to all shareholders of record on the record date, and which means that you were a Torchlight shareholder, and you got a 1-for-1 share of Series A preferred, and that preferred was going to entitle you to either the proceeds from the sale of the assets, the oil and gas assets, or entitle you to a share on a 1-for-1 basis if the election was made to spin out the company. So that's where it's at. And June, I want to say 25th, 26th, somewhere around there. That's when the Series A pref was issued. And I, went on my merry way. MetaMaterials took over management. The ticker changed, and I was just basically kind of, semi-retired at that point. And it wasn't until probably 3 or 4 months later that I got a call from my broker and says, "Hey, your Series A pref shares and in your account are now worth $6 million. I'm like, "What the heck are you talking about? That's impossible. Series A pref is not supposed to trade." And so I got to the hotel, looked up on OTC Markets. He gave me the ticker. And I'm like, well, not only is it not supposed to be trading, all of the information on OTC Markets is fraudulent. It's all my management team from 2012. And so it's got our former CEO listed as the CEO. It's got me listed as president. It's got all of our old board of directors, a website that's defunct, an address that's defunct. Everything on it is pure fraud.
It's mind-blowing.
And OTC Markets said, and I have all the records and the receipts. They basically said, "Look, FINRA approved it. We're not going to change it. We're not taking it down." And then I do know that the company at that time, because I'm no longer management, the CEO and CFO of MetaMaterials inquired along with their counsel as well. And I believe they were told that if two market makers got together and wanted to trade this, they could do it. And I will say, this is my theory on this, is that because we use DTC and because that Series A pref had a CUSIP number, we did it for ease of distribution to get this information out to everybody, that they turned around and there was some loophole that allows them to trade it. I don't know what that loophole is, but a loophole doesn't stop you from committing fraud. And so we don't know who filed the Form 211. We have our thoughts based upon the first orders of that day and tracing where they went, what market makers they went to. But we'll get to the bottom of that as well. But what's interesting about that is a lot of Series A pref holders saw this and they saw liquidity and they said, well, heck, I'll sell my shares. I might have 10,000 shares. I might have 5,000, what have you. And a lot of people sold their shares, probably 2, 3, 4 million shares. Well, you have to think to yourself, why is this trading? Why would somebody go through the process of getting this to trade unless they had a problem? It's not just to make a market and make a penny here and there. They had a problem that they needed to solve. When we did the merger, it was my theory that there were a significant number of shorts it didn't cover, and now they had the responsibility to deliver a share of Series A pref as well. And how are they going to do that? Well, my theory was confirmed about a year later because I was given a PDF from the OCC that basically in clear context and in writing said, we are not going to require you to settle your Series A pref as part of the dividend because we're going to see if we can get the Series A pref to trade.
Wow.
Now, that information only went out to the options market makers, didn't go out to the retail public. And so instead of covering, which you would think that they would be doing, they were still shorting and shorting into the whole thing.
So their plan was always there that they wouldn't have to cover and that they'd find a kind of a wormhole to go through and then basically defer it until you're now trading the Series A. And isn't it also right that it would have been a whole lot easier converting to the private company if it wasn't traded versus now that it is traded, which means you've got to go through a whole bunch more paperwork and approvals to even be able to actually convert it all into the private company.
Well, what's interesting is that yes, the answer that it would have been a lot easier if it was never traded, because we have no idea who the shareholders are, who the true shareholders are.
Right.
If there is a single share that closed short, then you have a single shareholder over here who doesn't really have their share. And so we believe there's, quite a large number of shares that did not cover. I don't want to speculate as to the number. There's a lot of people online that are speculating. That's not, neither here nor there for me. I just know that the number is probably very large. And I think it has something to do with the fact that in December of 21, we made an announcement, or Meta Materials made an announcement that there was going to be a spinoff instead of the sale of the assets. So first quarter, Wilson Sonsini, who is the counsel for Meta Materials, working with the SEC on the correct way to do everything. After many, many meetings with them, came back and said, look, you need to file an S1. And then when you spin it out, it's going to be a private company with no CUSIP and no DTC eligibility. Okay, everybody's on board. Drafting the S1, it finally gets filed in the first week of July. It was quite the document, very lengthy. And we go through 3 or 4 rounds of comments during this period where well, actually, let me back up something real quick. When we announced that we were doing a spinoff, instead of shareholders actually selling their Series A preferred, they started to buy.
Right.
Because they knew there was only 165 million shares that were going to be issued. And instead of, getting 80, 90 cents or $1, I'll buy it and, we'll get the oil and gas asset when it spins out. So it created even more angst for anybody who was short at that particular time through the next whole year. So that would have created angst for them. So July, we filed our S1 registration, goes through 3 or 4 rounds of comments, have to update financials, all of that rigmarole. And then through this whole period, we are basically letting FINRA know 60 days notice ahead of time that, hey, this is going to spin out and this is how it's going to be happening. It's not a dividend. There is no ex-dividend date. It is a share distribution. Therefore, when we give you the dates, the last date we give you is the last day it's going to trade. We're going to allow 2 days to settle. And then after the trade settles, we're going to issue shares. That's how it was designed. Everybody was cool with it. And then the closer we get to actually filing our final amendment to the S1 and finally our prospectus, obviously there's a lot of people watching the stock at this point. A lot of people are talking about it online and the stock is moving. I think the high it hit was a little over $12.50 a share on MMTLP. And then when we finally got FINRA, after getting approval from the S1 with the SEC, we finally, after about 10 days, got FINRA to issue a corporate action notice, and it was wrong. And so our attorneys got with FINRA, argued about it. DTC didn't like it. DTCC said it's wrong. And they basically came out and said, this thing's going to trade for 2 days on the 7th and 8th, and then it's going to go dark. No retail trading on the 9th and the 12th, meaning the only thing in our minds, the only thing that could have happened at that point is a cover, buy to cover.
We're talking about December here, right? So this is like 6 weeks ago.
22, right? Now, there's a lot of people's theory about why they halted the stock, but anyway, long and short of it is that if FINRA puts out a notice, we didn't really agree with it. They said, you guys don't have any input. We're doing it the way we want to do it. And then DTCC came out and said, we don't agree with it. We're not going to send it to our broker dealers. We're not going to force this issue with them because we don't agree with you either. And went back and forth, set a meeting for the next morning. Again, this is Thursday, okay? Second day of trading before this is supposed to stop. And FINRA doesn't show up to a meeting. They basically blow off the meeting with our counsel, DTCC, and FINRA, and ignored the meeting, basically said, we're not coming. They called DTCC on their own without our involvement and basically came out with another notice a half hour before trading stopped on that Thursday and changed one word. They changed from canceled to deleted. And the whole process was basically it was supposed to be, we're going to trade through the 12th. That's the last day of trading. We're going to eliminate the ticker on the 13th. We're going to allow for settlement on the 14th and then distribute shares on the 14th. So everybody in the world, long and short, knew that these were going to be the days. This was
Right.
it. Okay. So you knew in July, if you're a short position, that you've got however long to cover your short, whether it's a real short or a synthetic or whatever, you've got to cover because this company is going private. And guess what you can't do? You can't hold a short share in a private company.
Right.
So, I mean, the whole world knew, right? So when FINRA and DTCC got involved, DCT just said, you know what, we're not giving this notice to our broker dealers. We're not going to force anything on them because
Wow.
we don't like the way that this has gone down.
So
And
obviously at this point, they can see exactly what the challenge is. They can see just how much there's naked shorts or how much they just have no way of fitting all these people that say they have shares into the actual real number of shares. And they
right,
haven't shared any of that information with you or the public or anything like that. And it's been 6 weeks of silence at this point, right?
right. And so there's a reason why DTCC and FINRA didn't show up to that meeting. They didn't want to disclose how big the problem was. And within that, by that night, FINRA had halted. They said, you know what, we've got a problem. So they basically said in their U3 halt that there could be a potential problem with clearing. Therefore, you know, in order to preserve the market, we're halting. So there is no way in hell on the last day of trading, 13 million shares trading, and it goes from, you know, a high of, I think on that day, six something, all the way down to 290 the last trade. And every single market maker has had 505 listed. And, you know, these market makers talk to each other by what they're putting on their market, right? 505, 505. I need shares. I need shares. Okay. Then last day of trading, it stops. And then they halt it that night. So all of those people that were short just from that day have not covered.
Hmm.
Got the reported shorts. Then you've got the shorts in the obligation warehouse. Then you got the shorts in the CNS pool. Then you've got, you know, it just goes on and on. And then all the broker to broker clearing that went on outside of DTCC. So we are ultimately, myself and three other gentlemen are getting together with Wes Christian and his team. And we put up the money, we've engaged him and inside of our LLC. You'll see an announcement on that Tuesday that we're.
And by the way, by the time this video is showing, that action has going to have been taken, right? Like, because we're actually, like, you know, doing this Monday night, right? So you're about to do it, and I got to say, again, just talking about what retail investors can do, the fact that it's not even like, you know, the company doesn't even know. I'm talking about the oil and gas company that's being spinning off right now, that doesn't even know who the shareholders are. NextBridge can't actually even make any decision at the moment because it has no shareholder list. And at the moment, there's actually no like certainty coming out of FINRA SEC as to when this thing will be resolved, which means the only way at this point in the world you can get past this is legal action, right? And the fact that you as a group of investors are saying, well, we'll even pay for that to actually move this forward, I think is pretty amazing. I know Wes is very optimistic on like what's going to come out of this as well. But I'd love you to just share, based on where things are at, what you would recommend to other investors out there that may be in similar situations where you've actually got only like legal action that's necessary, or there might be other things you can do. And secondly, what do you think is going to be the outcome, or is it too early to say with what's going to happen in this case with MMTLP?
Well, I think that for the first question is, if you're a CEO or an issuer and you think that this is kind of going on in your company, the first thing I would do is get in touch with ShareIntel and do the work, do the investigation over 60, 90 days, and let them come to you and determine, you know, where he thinks the problems are before you even engage Wes. You know, Wes is a bulldog, but that information that's required is only going to help Wes and help him do the job he needs to do.
And by the way, that was what Wes said to us as well. He says, hey, like, you know, work with ShareIntel, get the actual proof. Because the great thing is, like, we are living in a very different time from back in 2014, where we actually have got enough, you know, ability to track. And ShareIntel is so sophisticated; they not only know where this is happening, but who's doing it. And then, of course, Wes can then really take action, which is where we're at right now.
Right, and I think the cool thing about it is there are enough of us who are willing to stand up that we're, you know, there's kind of strength in numbers, as I say. I know you have a big following, you have a lot of shareholders. Our MMTLP following on Twitter is just incredible. The amount of people that are, you know, really engaged in this. And I think the more companies and more CEOs that kind of come together and shed light on this, the better off we're all going to be. Because at the end of the day, something is wrong, and something is inherently wrong when people are allowed to steal from the American public. And quite frankly, if knowing what I know now, it's going to be very difficult for me to put money back into the market unless they are able to fix this. It's just not right. It's not fair. It's not, they're stealing from the American public. And, if you and I were to walk down the street and steal a car and copy the title 100 times, as Wes says, and sell that car 100 times, we'd be in jail. And so this is no different. And we're going to get to the bottom of it, hopefully with all of us coming together in numbers. It's going to shed a lot more light on it. People are going to talk about it. Congress is going to talk about it. Ultimately, Congress is the only one that has oversight over FINRA and DTCC. And so that has to be a pressure campaign on that side of it. And I think that people are starting to take notice of this. It's not so buried under the rug anymore. People are really talking about this. So I think
I agree. And I think that the way that Wes himself is so much more positive now, because there is, first of all, so many CEOs now that are showing up saying, right, let's share information and actually let's take action and let's stand up for our shareholders. He's making more inroads also, right? The likes of, SEC, FINRA, and what can be done differently, which I'm sure we're going to be all hearing about in the coming weeks as well, which is very exciting. And I just want to just acknowledge you, because when I reached out to you, you were just straight back and said, yeah, let's have a call. Let's work this out. And the more that we can be helping each other, because behind every CEO, behind every company, like in your case, you're up to 65,000 shareholders. There are thousands and thousands of people that are relying on us making the right leadership decisions for the benefits of them. And that's not even counting the customers and partners and everyone else that each of us work with as well. So it's so, so, so important. I really, really hope that message gets out to more and more CEOs, right? That the retail investors on their own cannot, they can feel the pain, but they cannot resolve it on their own. But with the help of the CEOs and the likes of Wes Christian, we can actually start making some huge differences for all of us going forward.
I agree. And then, CEOs, stand up for your shareholders. They will go to war for you if they know that you have their back. 100%.
Fantastic. John, I know we are right in the midst of this. Another chapter is just being written. I'm looking forward to basically having another conversation once we have the next milestones hit on either one of our sides. But I just want to say a huge thank you for sharing and being so clear about exactly what the steps were, but also being so successful so far at actually taking the right actions for yourself and all the other shareholders of your companies.
It was my pleasure, Roger. It was great talking to you over the weekend and again today, and I'm sure we'll be talking a lot more. So good luck to you and your shareholders, and anything you need from me, happy to do it.
Brilliant. Thanks, John.
Thanks, Roger.